Okay guys, and welcome to today's video. So today we're going to just have a quick review on Eurusd, the daily time frame. So with the video I uploaded recently, practically almost a week now, about the fair value gap on the Euro USD, what we're aiming for, I called for this particular fair value gap on the Euro USD, and at that point price was at this level. This was what we had in price. So this was price had not print out these parts already. Price was still here. So for those of you that don't know the video, I will leave the link to that video around here. So I said we should aim for this particular fair value gap, and I just gave it out as a signal or an anticipation that we should just look out for. I didn't say go in and trade live money. I said it's something we should look out for and anticipate, to be able to train your eyes to see what the price is actually doing. So that was the price level we're aiming for on the daily charts, and so far so good. This is 2 weeks from the time we made that analysis, and this is what price has actually done. So this was just set to the record that we saw that the price didn't tap into the fair value gap without retrace, without before selling, before the sell off. We saw that price even tap into the fair value gap. So this was set to the record in our minds that something actually happened in this analysis. You know what I'm saying? Something is there that we didn't pay attention to. You know what I'm saying? Something really transpired, and that means you don't just go into the price charts to just trade an idea, you know what I'm saying, just randomly. You know what I'm saying? You get. So in view of this, I'm gonna just point out a little thing, you know what I'm saying, which I'll point out in probably almost the videos I've shot out for you guys about trading this institutional reference point and smart money. And when you're able to understand this particular thing, you'll be able to how will I put it, you'll be able to have an edge in the marketplace. You find out that these stuffs are not just holy grails, you know what I'm saying. They are meant to give you precision and directions in the marketplace. They are not meant to just act as just a strategy on their own. You know what I'm saying? You have to blend in some couple of things, and I'm just going to add one element on why price actually sold off instead of trading into that daily fair value gap on the Euro USD. So we did the intermarket analysis with the SMT, that's SMT divergence with the dollar index. We agreed that price was going to go lower because we saw the dollar making what's higher highs over here, and on the Euro USD, which is a foreign pair to the dollar, we saw the dollar making what we saw that making what higher highs also right here, you get. And so far so good. Sorry, not higher high, higher low rather. You want to say that's right here, higher low over here. And so far so good. That would have been enough confirmation for us to see higher prices into that particular fair value gap there. But it happened that price didn't actually trade into those things, into that particular objective we're aiming for on the Euro USD. So I just want to point out why this particular candle, this particular institutional reference point that's been this fair value gap, as the case may be, was not responded to. Why pricing respond or take that place as an objective? You are saying during this whole price action printing right here, instead price came up, took out this weak high, traded down, took out this other weak high, and since then we've seen a sell-off even in this week. And at the time of recording, this is Thursday of June, which is the last day in the month of June, you understand. And price didn't even respect this fair value gap or trading to it. Instead price came for lower prices, you understand. And where some of us will probably be like, this didn't work, you know what I'm saying. So if I ask us, well, let's say we're in a room and I asked us, okay, what actually transpired and why this didn't happen, probably there'll be a lot of reasons. Some of you say there's a market structure shift. I want to say probably price broke lower here, took out this, and we're going to be seeing lower prices, which are not wrong. Some of us will also say I drew my trend line, and when I drew my trend line, price broke and I knew price was not going to go ahead. So some of us will probably say, okay, there was a false breakout right here, and say, and the rest you get. But I'm not going to argue with any one of us on any opinion that we have. You know what I'm saying? I'm still going to just stay using the fair value gap strategy to really point out a scenario for us. Mind you, if you watch the fair value gap video, I made a point there. I said the fair value gap on the higher time frames are the one that actually holds true rather. And I mentioned the 3 higher time frame that we should really focus on, which is the monthly, the weekly, and the daily. So now this analysis which was conducted on that video was done on the daily, you know what I'm saying, and we're aiming for the daily fair value gap. But now let's just go higher into a higher time frame right here on the weekly. So at the time of shooting that video, this was what price had done. Price had not printed these parts, you want to say, of candlesticks that we are seeing right now. Price had only printed here and here. So now looking at this particular piece of price action, now what can you call here? What institutional reference point can you say around here? Exactly what? A fair value gap. That's what you can see. Now this fair value gap is where? On the weekly time frame. Let me get that and put it very well with great precision. Let me get it out. So you can see the fair value gap is where? On the weekly time frame. You want to say clearly seen on the weekly time frame. And if you drop down to the daily, you figure out that this fair value gap on the weekly time frame is just before you get into what? The fair value gap on what? On the what? Daily time frame, as you can see right there. So which time frame is higher than the other? Obviously the weekly time frame. And not just that the weekly time frame is higher than the daily time frame, is that the institutional reference point of the weekly time frame, you first tap into it before tapping into the daily time frame institutional reference point. And at this case, that's what we had. The next week, if I drop down to the 4-hour time frame and zoom out, you see that if I put a period separator, you find that the next week what happened? Price traded high into where? The weekly. Let me get out this, remove this particular piece of price. Price did what? Traded into where? Into the fair value gap where? On the what? The weekly time frame. And since then, we saw what? A response in price was lower. This week, at the time of recording, price traded higher where? Taking the highs, the liquidity above this high, not going for this particular fair value gap on the daily time frame, just tapping just above this high. And what since then we have started seeing what? A sell off. I want to say. So you can see how blending 2 time frames, the institutional reference point on these 2 time frames, can actually give us the direction of the marketplace. You want to say, and actually make us avoid trading in the wrong direction of the marketplace. So I know probably some of you must have seen that video and watched it, and probably would have gone and holding strong biases that the dollar euro dollar will actually get to that fair value gap on the daily, and probably some of us got bumped and were like, it doesn't work. So that's why I came up with this video, to be able to point out to you why and what you should be looking out for, and how you should be able to blend this analysis to be able to arrive at that concrete decision or bias in the marketplace at every given point in time. You understand? You don't want to just go, I see a fair value gap and you just trade it. Oh, I see another block, I just trade it. You want to be able to blend and be able to marry the ideas, the 2 and 2 ideas. You know what I'm saying? Probably you have 3 time frames you're looking at. Okay, why is this happening like this? I'm expecting this to happen in the market. So if this does not happen in the market, why is it happening the other way around than I predicted? That's what smart money concept is meant to do for you. The smart money concept is meant to give you that level of precision. So as for me, while I was trading, I saw I expected bullish prices on the dollar, euro dollar rather, and I saw that I was having a lot of consolidation, even all the way to Tuesday, I saw price going lower and it was failing to make the quick highs that I need. All of a sudden, I just knew that there was something actually wrong. You know what I'm saying? In the marketplace, it wasn't going the way I planned. You get what I'm trying to say? So all of a sudden, I started questioning the analysis. You understand? So why I'm making this video is just to point out to you that you just don't need to go there and trade these ideas blindly. Don't make them just an holy grail. They are tools. You know what I'm saying? They are tools that you want to apply on your chart in a great context, in a bigger context. And to just add to this, I'll be coming up with some series of market structure videos very, very soon on this channel. An institutional order flow also that will help you marry these ideas and be able to see them pull through, how to be able to see them marry the ideas and get to that concrete decisions in the marketplace. And I hope you find this video very insightful. I'll see you in the next video.